Here's another important event this week. The US Fed will release the minutes of its August 1st meet. With no rate hike at the meet, some economists believe that the Fed had time to discuss the outlook of interest rates next year, and that, along with the progress of the balance sheet unwinding, will be the main focus of the event. Chairman Jerome Powell is also scheduled to speak at the Fed's annual gathering in Jackson Hole on Friday. And ET Now earlier spoke to Michael McCarthy, chief strategist at CMC Markets, and he talks about his outlook for the US Fed.
It's really all about the timing of the interest rate tightening that's currently going on in the US. The very strong data that we've seen at the corporate level and also at the broader economic level has fed ideas that there might be more than 2 more rate hikes to come in the US this year. And if that's the case, we're likely to see market reactions. This speech at Jackson Hole from Mr. Powell is an opportunity for him to prepare the markets for that eventuality, and that will probably be the most closely watched point. If Mr. Powell hints that there could be more than 2 rate rises this year as part of his speech, there will be, as I say, a market reaction.
Talks with US and China, with the trade talks underway and the kind of hints that have been given and comments being made by Donald Trump, the outcome of this is keenly being watched out for. What exactly are we expecting, because the latest round of US tariffs against China come into effect tomorrow?
Well, you're absolutely right. There's no doubt this is the #1 issue in investors' minds around the globe. The potential for a damaging trade war between China and the US would have impacts for all economies globally, and so we're watching very, very closely. Ironically here, the best news is no news, because if these negotiations are to be successful, it's very likely they'll have to be conducted behind closed doors. And so while we're not hearing anything, it's actually a positive sign. We do know, however, that the sanctions, the first round of sanctions on $16 billion worth of goods, are due to kick in tomorrow night in our time zone. And if that reminds investors of the dangers to the health of markets that these tariffs bring, we could once again see an important market reaction.